When establishing a self-managed super fund, it is crucial that the assets that belong to the fund are held in a separate account used only for the self-managed super fund. Why a cash management trust? Higher interest rate and bank account. Checkbook, deposit book and debit card are attached. Contains a minimum balance of at least $100. We can set it up in our office. We have online access to balances. We can transfer from your self-managed super fund cash management trust to your personal cash management trust for pension payments. We can make super contributions from your personal account to the self-managed super fund cash management trust. For your protection, we can only transfer to these linked accounts. If you have a private company, we can also add a cash management trust and transfer wages and super contributions to your other cash management trust accounts. The cash management account forms the hub of the self-managed super fund, holding sufficient funds to meet any outgoings and accepting any dividends received from direct shareholdings. Term deposits and other bank products are attached to the cash management trust as part of a defensive portion of the overall investment strategy. Why term deposits? High interest rate. Generally offer better rates than managed fund fixed interest. Fixed rate. Flexible terms. Choice of using any bank. Security. A self-managed super fund administration service, or wrap account, is attached to the cash management account to consolidate the management of individual investment funds and direct shares owned by the self-managed super fund. Why self-managed super fund admin service? Consolidated reporting of shares and specialist funds. One account login, everything in the one place. Competitive fee structure. Access to over 130 managed funds. Access to direct shares. Your personal cash management account is always kept separate from your self-managed super fund account. Why direct shares? Reduced cost compared to managed funds. Reduced costs due to less trading. Concentration on larger blue-chip funds. They make better use of franking credits. Why specialist managed funds? Give smaller investors access to property, Australian and international. Small companies, better researched through managed funds. International fund, again, better research and easier to access. Specialist funds, such as ethical, geared, resource or Asian. Gives additional diversification to your super funds. There are up to 3 distinct components to a self-managed super fund: the cash hub, term deposits and other bank products, and the administration service. It is also possible to add a 4th, direct property. There are many considerations which need to be taken into account when considering property, as not all types are able to be owned by a self-managed super fund. The cash management account forms the hub of the self-managed super fund, with all income, earnings and contributions paid into that account. All outgoings, including pension payments, investment purchases, taxes, and management costs, are paid through the cash management account. Once you have met your preservation age, currently 55 but gradually increasing to 60, we are able to increase your superannuation balance while lowering the amount of personal income tax you pay by converting the majority of your superannuation into an account-based pension. This will provide tax-effective income up to age 60 and tax-free from 60 onwards. To ensure your superannuation savings continue to grow, this is combined with a salary sacrifice arrangement to maintain your current after-tax income. Your individual circumstances will determine how effective this strategy could be for you. What do we do? If funds aren't in the self-managed super fund, we will facilitate to transfer from your retail superannuation to the self-managed super fund. Recommend a portfolio and implement the investment strategy. Attach life insurance if required. Review liquidity of the fund and reinvest income. Introduce special opportunities like IPOs as they become available. Manage cash flow in the self-managed super fund and your personal needs. Quarterly report showing all balances. Invest and roll over term deposits. Provide tax statements and bank statements to nominated accountant to complete the tax returns and meet statutory requirements. Meet twice a year to review your position and alter investment strategy and cash flows depending on your needs.